we while the market had been trading up in here, we had noted several times going all the way back to the November 17th date that as long as the market was closing daily above 46.78 and I think 46.72, either one of them, but both of them primarily, that even an hourly close below those levels as we approached the week of December 6th would usher in a kind of a mini crash that would take the market from the break of 46.78 or 72 down to 45.90 to 45.85. And that's exactly what happened on Friday. They broke it and then they just ran straight down. They made a low of 45.77.25, spiking through the 45.90 to 85 target and closed pretty poorly. I mean, that's a pretty poor close, 45.79. Either way, by having completed the 45.90 to 85, that would be due on or before the week of December 6th, really in the plus or minus range, 1 week early, which is what had happened. This, by the way, today, this is a daily chart. This is the one, we're in the 1 week early. And so far the low has been 45.8875. So that certainly accounts for the 45.90 to 45.85 that would be due in the 1 week early or on the on-time week. This is the 1 week early for the week of December 6th. Then let's take a quick look at today's intraday. Today we had the indication that the second or third hour of today, this was given out right at the start, would move down into the 46.28 to 26 level and possibly touch 21 or 20 in the process, which they did. They got down to 46.21. Then we forecast they would move up to 46.41 from there, which they did. Then we said if they can close above 46.46, which is about where my cursor is, they would move up to 46.58 to 60, and then into late today, 46.70 to 72. Ed is here and he says, David, was the mini crash sufficient to trigger a weekly bottom? No, it wasn't. He says, do you expect the lows to be retested prior to any further upside? That's an interesting question. So I do expect under normal conditions, and I think we have really good conditions right now, normal meaning good high volatility and so on. I do expect certain levels to be retested later this week. I do. Retested on the downside. And there is something that the market could do to take that off the table. And I'll let you know if that happens. But there is a potentially really interesting, provocative short position that we may end up putting out for the purpose of taking advantage of that time period where that would be happening on the downside. So, you do learn to think a step ahead. It's not necessarily even just to think 2 steps ahead, but just 1 step ahead, and try to get ahead of where the market is now, because they may very quickly rush up to a number that you would later be saying, I have to take action at this number. So it's a good idea to kind of stay ahead, think ahead of the current position of the market or the current thing that has just completed. Try to stay ahead of that. That's what we're doing. So thank you, Ed. Great to have you here. Rhonda's here. Hi, Rhonda. She says, you mentioned your forecast last week that a break of 78 to 72 would trigger a drop to 45.95 into the week of December 6th. If the S&P recaptures 72 to 78, are those levels significant on the way up? That is a great question. Let's take a look at that. It's interesting that you asked that, because I have not thought about that this morning yet. So, it's a good idea to try to think about those things. Actually, under the conditions that we have, I would say, Rhonda, that there's a lifespan to certain indications, right? I mean, a person in a boat, measures and says, well, the winds are a little high, the sun is in the east. He lays out all the conditions, and therefore he might or might not be able to do this certain thing with his boat. Those conditions, though, eventually move on, and other conditions supersede those. Now you're in new conditions. So at this point, I'm going to give you the answer. No, getting back above 78 is not going to do it for us. But I think getting above 85 would probably start to do something for us, where we would say the market's in a much stronger position by, closing perhaps above 85, 86, something like that. So that is a good question. I think we've moved on far enough from those numbers that in order for me to read the indication that you're saying and say, oh, we're in a really strong position again, because remember, we're not in a really, really strong position right now. The market's gone up quite a bit, but positionally, we're not yet in a really strong position. This is just a really good reaction off of a completion on the downside, and good on them that they can even do this. So yeah, I think my best answer would be no, we have to close. We'd have to be doing better than that to get, if I'm not mistaken, I think we have to do better than that. So I hope that's useful. Rhonda, thank you for your thoughtful question.